We are all about the early retirement movement on this channel. The best ways to retire early include earning passive income through investments, starting a business that requires little time commitment, or renting out your house. However, there are a few better ways to do so than investing in Elon Musk's massive electric vehicle company, Tesla. Growth stock investing is a great way to generate passive income. We're all familiar with the calculation that says that a $1,000 investment made in Tesla in 2011 would be worth $240,000 today. With that in mind, let's aim a little further than we usually do after 10 years since 2011. How about we decide on 2031 as our reasonable target? The number of Tesla shares. To learn more, click the like button, subscribe, and never stop watching Fire Stands for financial information. Would we need to retire then? If so, when and where should you put your savings? The best-selling book, Your Money or Your Life by Vicki Robin and Joe Dominguez served as inspiration for FIRE. Independence Retire Early FIRE is a growing trend among people who are determined to retire far sooner than the AIDA, which most people may expect to be financially independent based on their current income and lifestyle. Because of societal changes, the book encouraged readers to calculate the amount of hours needed to pay for each item. Nowadays, fewer people want to work for decades without taking pension money into account. How can this issue be resolved? The ability to retire comfortably is typically a myth because so few people can truly make it work. The average person doesn't invest as much in their future as a FIRE believer does. But if you start early and set aside a portion of your paycheck each month for investments, especially in a company with potential for growth like Tesla, you can increase your retirement savings to the point where they can supplement pension funds and give you financial security in your later years. So put it simply, how can this issue be resolved so that you can use that 2031 to purchase Tesla shares by raising your savings rate? Target in mind, inflation rates in 2021 and 2022 alone were over 8%, the grazed in decades. While this is much higher than historical averages, you at least need to factor in an annual inflation of roughly 2%, which is where investing in compound interest comes into the play. An estimated 3 million more people of retirement age have entered the population because of the COVID-19 retirement wave. This is the joy of investing, and forget about inflation for a while. Despite being only 20 years old, Tesla is already a market leader of paving the way for a more sustainable future, and it has attracted a large number of investors who are eager to invest. Persistent decline of its stock seems to have paused, could be a good investment for some people. Although it doesn't mean everyone should write. You shouldn't put all your eggs in one basket, so to speak, because doing so increases your chance of losing a significant portion of your investment in a single firm or sector. Never put your life savings in danger like this. But the price of Tesla shares is another factor that will cap your budget. For investors who are short on cash or who are unable to purchase a whole share at the current market price of around $200 per share could present a challenge. Fractional shares are a better option. But when choosing a broker, keep in mind that not all of them will make it easy to purchase fractional shares of Tesla. The company's long-term prospects must also be taken into account, even though a 2017 study found that stocks outperformed Treasury bills. Maintaining your money will be made easier if you stick to smart investments. Government bonds have not done as well as the stock market. We found that about 52 of stocks end up in the red. Hendrik Bessemer of Arizona State University estimates that more than 26,000 companies declare for bankruptcy between 1926 and 2016. Nevertheless, we think that purchasing Tesla is a smart choice, despite the uncertainty surrounding the company's future. Thanks to record sales, profits, and cash flow increases in 2020, 2021, and later in 2022, Tesla has made quality and safety central to its brand identity. Two analysts predict that Tesla will be among the most profitable automakers in the world by 2031 due to its growing economies of scale and higher average selling prices. Based on the current market price of a coin, early investors could become extremely wealthy if Tesla can meet its goals of increasing annual deliveries by 41% from 500,000 in 2020 to a million in 2026. As of the end of the year, the company had $7.7 billion in cash and $24.6 billion in debt. Regarding the 2,500 price tag, which represents a 287% rise over the stock's current value, what are other investors thinking? Nearly all specialists in the subject of finance, supporter of ardent Tesla and a former Google employee, advocate buying the bull market is going into uncharted territory, forcing diversification, according to Debolt Page. Conservatives winced as he hurried to social media to announce his newfound money. Tesla bulls expressed their optimism regarding the conserved company's future, despite the fact that a blog post stated that it is still risky to invest in. However, I would never ever risk everything on a single investment that has the potential to soar, because by distributing my bets, I can't possibly lose money, especially with an average cost basis of $58. The Bolt owns 14,850 Tesla shares. He purchased 2,500 shares in 2013 for $7.50 each, and he believes they are currently worth $2.2 million. He believes there may not be another Tesla for at least 50 years. It's easier to fall into the trap of suggesting a number based on your age, but the truth is that your retirement savings goal likely differs greatly from that of your siblings, neighbors, or even coworkers. Calculating the required amount of savings to retire is an important part of retirement planning. Approximately how many Tesla shares are needed for retirement? Your salary and retirement plans will determine the answer. You can better prepare for retirement if you know the recommended savings rate for your troop. The majority of authorities concur that your individual requirements depend on a variety of factors, most notably lifestyle choices. For instance, if you earn $100,000 before you retire, you will need at least $80,000 annually. Inflation and stock appreciation do not factor into this calculation. However, prior to retirement, you should have saved at least 25 times your annual expenses. For instance, $1.25 million in savings would cover a $50,000 annual cost to the tunnist. $2.5 million if you had $100,000. It will take roughly 25 times your annual income to live comfortably in retirement, at least according to internet retirement calculators. Retirement in 2031 would require 37 years. If you saved 20% of your salary annually and you expected your investments to yield 5 to 7% after inflation. If you saved 25% of your income annually, it would take 31 years. How can we do this, Fire? The optimal number of Tesla shares to purchase is not predetermined. Instead, you can use the techniques in the video to calculate a personalized amount that varies based on your background, salary, your desired lifestyle, and other factors. It is a good idea to follow Kevin's advice and spread your investments across several distinct markets, although it's probable that the split influenced investors' decisions to buy Tesla shares. If you already own shares in other automakers or renewable energy companies, you may be able to profit from their growth. However, if you add Tesla to your portfolio, you can reduce the impact of any one industry on your savings. How many Tesla shirts do you have on average for each retiree in 2031? How many more will you need? Please leave a comment below. We'd be interested in hearing what you think. If you enjoyed the video, please remember to subscribe. I'll see you in the next one.